Hello, fellow traders. 'Tis I, the Rumpled One. Today's topic, the daily Wick zone. As you guys know, I like to code. I do a lot of coding. So I change things around. Today, what I've done is I've incorporated pretty much everything you need to know about the daily Wick zone trade into the indicator. I added a few things just so you can just put the one indicator on your chart and be done with it. We've got the pair you're trading and the current price. And we're using the daily Wick zones. First line is previous high minus the close. And you can see here it's a minus 26 because this is the previous high. And if you subtract the close from it, you'll get a negative number. And as you can see, had you taken this daily Wick zone trade long and long and long, you would have made some nice pips. Also, had you gone short, you could have might have had a tough time the first time, but you could have come back and made it up once again there and a few here. This one looks like it was probably, maybe you got stopped out. If you reversed, you made your money back. I also put in close minus open. This is the open price. This is the number of pips away from the open. So right now, price is 32 pips above the daily open, which this line here is the close of yesterday. Right here is the close of yesterday, but it also happened to be the open right here of the 24-hour period that we're looking at today. Usually the close and the previous close and open are about the same, except on the Friday to Monday gap. Then we have close minus the previous low, close minus the previous low here, 108 pips. Then we have the range, which is today's high minus today's low, 63.3 pips. And right now, price is at the 81% level. So if you like your fib numbers, I always put 0 at the bottom and 100 at the top. That just seems to make sense to me. And right now, we're at the 81% level. Then you have a little note in the indicator. I call it my comment. You can put whatever you want in there. As I like to say, trade what you see. Here's some of the things I've added today. If you're familiar with my rat zone indicator, based on and the training wheels indicator, rule of thumb, you only trade with the candle color for H1, D1, and W1. The hourly, the daily, and the weekly. So see here, we're on H1 at the moment. So these are H1 candles. We only want to trade short, but the daily is up, green. The weekly is up. So if you turn the training wheels on, it says do not enter the trade. This keeps the new people from making bad trades. You see here, training wheels true. If you set that to false, then you're on your own. You decide. But I like to have the training wheels on because that way it's just a healthy reminder. Lets me know when I need to sit on my hands and not enter a trade. And as you can see, here's the daily Wick zone of yesterday's candle. Since this is green, yesterday's candle was green. If we switch over to D1, you can see yesterday's candle was green, and you can see the zones. And you see they don't change because price is the same no matter what the time frame. Now, a lot of people always say, well, you could get cut up a lot and this trade could hurt you and blah, blah, blah. You guys know what it's like out there. So let's just look at the M1 and let's hit F8 and let's take the auto scroll off so we can just look at what would have happened here. Okay, here we go for the day. You see here, you could have taken that short. You could have gotten out of that trade. Here you could have gone long. This is 1 minute chart. You could have made money. You could have gone long again and made money. You could have gone short here and made money. Now, you could have gone long here and made money. Now here, if you would have gone short, you would have gotten stopped out. Remember, the width is the number of pips that you're going to be risking. The stop is the width of the zone, maybe +1 or +2. And then you recalculate your position size. But if there was a trade, if the euro was in the zone, then a display would come up and give you those calculations. Once again, if you would have gone short, money to be made. Long, money to be made. Long, money to be made. So you see here, you could have been making money all along just by taking the trades out of the zone. Now, one trader asked about the rat. He says, you're saying you can go long here and short here, but what if you're a rat? Well, if you're a rat, then you only go take the trade in one direction. Yes, it does look like it's profitable in the other direction, but once again, if you trade in both directions, you're opening up yourself to black swans coming either way. And that's just something that's up to the trader. And see, once again here, had you gone short, you would have gotten stopped out. But if you used the training wheels, you would have gotten long here because you wouldn't have gone short, because today is a green day, so you have to trade with the D1 candle color. And that's what keeps people from losing. So you see, it's a very simple trade. And it doesn't matter what time frame you use. We can go to 5 minute. And you can see the results are going to be the same. We can go to 15 minute. And you can see the results would be the same, because price is the same on all time frames. And you'll probably hear me repeat that multiple times in all these videos until it sinks in, because there's a lot of people out there think they're trading charts, and I say we're not trading charts. If we were trading charts, they'd be like baseball cards on cardboard or something. What we are trading is price, and it doesn't matter. We can go to the hour chart and you can see once again it's the same. And the one thing to realize on these charts is how long it takes to make money. I'm going to stress on that point too, because a lot of people think they're going to get in there and make all these trades really quick. It takes time to make pips. Do you see that? We are now on the M30 chart. This is a half an hour from here to here. Now, some people think that's a short time. Some people think it's a long time. Depends on you, your nature. You get fidgety. You enter the trade, and then you just want it to hurry up and make money. Well, it doesn't work that way all the time. Maybe during news spikes or some other spikes, but not usually. So you see, once again, we've got horizontal lines. We don't have any squiggly lines. We don't have anything junking up our screen. Just very simple, very simple. Now, I know some people like to accuse me of cherry picking, so let's just go and put the auto scroll back on, and let's pull out another pair. Okay, the pound dollar, same thing. As you can see, going long, profitable. Going long, well, if you weren't quick, you lost. If you went short, you made money. And it's up to you. If you want to take the short side against the D1 candle color, that is okay. But actually, according to the chart here, you see it turned red right there. So pretty much you can take it either way here. And you see the magenta line, that is the previous day's midpoint, halfway between the previous day's high and low. And you see the price action around the midpoint. Once again, something to note. That's why it's there. You might want to consider exiting a trade there with some pips in your pocket. Or if it reaches that point, you could put on a trailing stop. That's part of the exit playbook. And you can see here the color changes depending on the color of the D1 candle, just so you know. This is previous. And you can see here, this is red because it closes below the open. Let's pick out another pair. Here we go. The US dollar, Swiss franc. Once again, you can see here, it went through the zone, profit. Went up through the zone, profit. Down through the zone, profit. Here, it didn't exit, but when it came back down, profit. Simple trade, profitable trade. Let's look at the dollar yen. Once again, the same thing. No long trigger here. Here goes your short. Money to be made. It's down for the day. This would be the open right about here. So you see, once again, following the candle color, if you're a red rat, or if you're a Yale student, you would have made money. It's a very simple trade. Australian US dollar. Same thing. Here, went down, came back up through the zone. Barely touched it, bounced off it. Got close, bounced again. Once again, trading with the daily and the hourly and the weekly shows you'll be on the right side of the trade. So many people ask me, tell me they're on the wrong side of the trade. How do I get on the right side of the trade? By trading with the candle colors. Another example, the euro yen. Long here, money to be made. Short here, money to be made. Even here, it would have been a quick in and out, but there's money to be made. Let's take it down to M1 so we can see the price action. And there you have it. There was an opportunity to get in and out of that trade and make money. And that's what we all want to do, right? So, if there's any questions, make sure you post them in the forum. Or you can post them on YouTube. Don't PM me with questions on forums because it takes too long. You have to wait sometimes 5 minutes between PMs to make another PM. Don't email me because then it's just between you and I. But if you have a question, there might be 100 or 1,000 other traders with the same question. That way I only have to answer it once. So find a forum where I post, ask your question there, or put it right here down below. And I like to thank everybody for watching these videos. I appreciate it. And if you haven't, go ahead, subscribe. I'm going to probably pump a few out each week now because I've got a lot of catching up to do. And if you have any suggestions, feel free. We can learn from each other. You might have an idea on an indicator, or if you might have a problem on an indicator, just let me know so I can fix it. Anyway, you guys know where I hang out, so you know where to find me. And remember, fellow traders, it's not what you trade, it's how you trade it.